The global currency market continues to attract strong attention from investors, speculators, and international observers as developments surrounding the Vietnamese Dong and the Iraqi Dinar remain among the most discussed topics in the foreign exchange community. During June 2026, both currencies have experienced renewed interest due to ongoing economic reforms, central bank actions, government policies, and expectations regarding future exchange rate stability. While rumors of dramatic overnight revaluations continue to circulate across social media platforms and online forums, the official data coming from financial institutions and monetary authorities paints a more measured picture of the current situation. In Vietnam, the Vietnamese Dong remains closely linked to the country's broader economic performance. Vietnam has continued to demonstrate economic resilience despite global uncertainties, maintaining strong manufacturing output, export activity, and foreign direct investment inflows. Analysts note that Vietnam's position as a major manufacturing hub in Asia has helped support confidence in the country's financial system. Recent reports indicate that the Vietnamese Dong has traded within a relatively stable range against the US dollar, with the State Bank of Vietnam continuing to monitor currency movements and intervene when necessary to maintain market stability. Current market observations show the Dong trading around the 26,000 VND per US dollar area, reflecting a controlled and managed exchange rate environment rather than a sudden appreciation scenario. The State Bank of Vietnam has repeatedly emphasized its commitment to maintaining financial stability, controlling inflation, and supporting economic growth. Policymakers have indicated that exchange rate management remains a key priority as the country navigates external pressures, including global interest rate trends, international trade developments, and regional economic conditions. Financial analysts continue to view the Vietnamese currency as relatively stable compared with many emerging market currencies, although forecasts suggest that authorities will continue allowing gradual adjustments when necessary, rather than pursuing any abrupt currency revaluation strategy. Throughout the first half of 2026, investors have closely monitored Vietnam's export sector, which remains one of the most important drivers of economic activity. Strong export performance generally supports foreign currency inflows and contributes to confidence in the domestic currency. At the same time, policymakers have sought to balance export competitiveness with exchange rate stability. A currency that appreciates too rapidly could potentially affect the competitiveness of Vietnamese goods in international markets, while excessive depreciation could increase imported inflation. As a result, the central bank continues to pursue a balanced approach aimed at preserving macroeconomic stability. One of the major discussions among currency enthusiasts concerns the possibility of a significant Vietnamese Dong revaluation. However, economists generally caution that large-scale revaluations are uncommon in modern managed currency systems. Instead, adjustments typically occur gradually as economic fundamentals evolve over time. Vietnam's monetary authorities have not announced any plans for a dramatic revaluation event. Rather, official communications continue to focus on stability, inflation management, and sustainable economic development. Investors therefore remain attentive to economic indicators such as GDP growth, trade balances, foreign exchange reserves, inflation trends, and monetary policy decisions as potential drivers of future exchange rate movements. Recent financial sector data suggests that Vietnam's banking system remains well-positioned to support economic growth. Credit demand has increased alongside business expansion and consumer activity, while policymakers continue monitoring liquidity conditions. The country's monetary framework remains focused on supporting economic growth while preventing excessive inflationary pressures. These factors contribute to overall confidence in the Vietnamese financial system. and influence expectations regarding the future direction of the Dong. International investors continue to view Vietnam as an important destination for manufacturing investment, particularly as companies diversify supply chains across Asia. Foreign direct investment remains a significant source of capital inflows, helping support the country's balance of payments and broader economic outlook. Continued investment in infrastructure, technology, and industrial development further strengthens long-term confidence in Vietnam's economic trajectory. While these factors may support the currency over time, analysts generally expect any appreciation to occur gradually rather than through a sudden revaluation announcement. Turning to Iraq, the Iraqi dinar remains one of the world's most widely discussed currencies among speculative investors. Interest in the dinar has persisted for many years due to Iraq's substantial oil reserves, ongoing reconstruction efforts, and expectations that future economic reforms could strengthen the country's financial position. During June 2026, the Iraqi dinar has remained relatively stable under the framework established by the Central Bank of Iraq. Official exchange rate policies continue to play a central role in maintaining monetary stability throughout the country. The Central Bank of Iraq continues to maintain an official exchange rate near 1,300 Iraqi dinars per US dollar. Reports from financial institutions and market observers indicate that this official rate remains the foundation of Iraq's exchange rate policy. While parallel market rates occasionally fluctuate due to supply and demand dynamics, the central bank has consistently emphasized its commitment to preserving stability and reducing volatility. Recent market reports show that exchange rate conditions across Baghdad, Erbil, and Basra have remained relatively steady compared with previous periods of heightened fluctuation. Iraq's economic outlook remains closely connected to developments in the energy sector. Oil exports continue to provide the majority of government revenue, making energy prices an important factor in the country's fiscal position. Strong oil revenues can enhance foreign exchange reserves, support government spending, and strengthen confidence in the financial system. At the same time, Iraqi policymakers continue pursuing economic reforms designed to diversify the economy and reduce dependence on oil over the long term. One of the most significant topics among dinar observers remains the possibility of an Iraqi dinar revaluation. Supporters of this theory often point to Iraq's natural resource wealth, infrastructure development projects, and financial sector modernization efforts as reasons for optimism. However, economists generally note that any meaningful appreciation in a currency's value typically reflects underlying economic fundamentals rather than a single policy announcement. While Iraq continues making progress in several areas, no official announcement has been issued indicating an imminent large-scale revaluation of the Iraqi dinar. The official exchange rate framework remains in place, and policymakers continue prioritizing stability. Financial experts emphasize that currency values are influenced by numerous factors, including foreign exchange reserves, trade balances, fiscal conditions, monetary policy, political stability, and investor confidence. Iraq has achieved important progress in strengthening its banking sector and enhancing financial transparency. But long-term currency appreciation would generally depend upon sustained economic growth and successful implementation of reform initiatives. Recent data indicates that the Iraqi dinar has remained relatively stable throughout 2026. Market exchange rates have fluctuated within expected ranges, while the Central Bank of Iraq has continued using various tools to support market stability. Observers note that the central bank's efforts to manage dollar flows and strengthen financial oversight have contributed to a more predictable currency environment compared with previous years. The Iraqi banking sector has also attracted increased attention as authorities work to modernize financial infrastructure and expand digital payment systems. improved banking services, stronger compliance measures, and greater integration with international financial standards are viewed as positive developments for the country's long-term economic future. Such reforms may help improve investor confidence and strengthen the overall financial environment in which the dinar operates. Another important factor influencing perceptions of the Iraqi dinar is Iraq's substantial foreign exchange reserve position. Strong reserves provide monetary authorities with additional flexibility when managing exchange rate policy and responding to market pressures. While reserve levels can fluctuate over time depending on economic conditions, they remain an important component of overall monetary stability. Comparisons between the Vietnamese Dong and the Iraqi dinar reveal interesting similarities and differences. Both currencies are closely managed by their respective central banks, and both governments prioritize exchange rate stability as part of broader economic strategies. However, the underlying economic structures differ significantly. Vietnam's economy is driven largely by manufacturing, exports, foreign investment, and industrial development, while Iraq's economy remains heavily influenced by oil production and energy exports. For investors following both currencies, the most important takeaway is that official data currently points towards stability rather than dramatic revaluation events. In Vietnam, policymakers continue focusing on sustainable growth and managed exchange rate adjustments. In Iraq, authorities remain committed to maintaining monetary stability while advancing economic reforms and strengthening the financial system. Neither country's central bank has announced any sudden revaluation plan, and most professional analysts continue emphasizing gradual economic evolution over speculative expectations. Market participants are therefore paying close attention to upcoming economic reports, central bank statements, inflation data, trade statistics, and fiscal developments. Any significant changes in these indicators could influence future currency expectations. For the Vietnamese Dong, factors such as export growth, foreign investment inflows, and global trade conditions will remain especially important. For the Iraqi dinar, developments in oil markets, fiscal management, banking reforms, and monetary policy will continue shaping investor sentiment. As the second half of 2026 approaches, analysts expect both Vietnam and Iraq to remain important economies to watch within their respective regions. Vietnam's continued emergence as a manufacturing powerhouse and Iraq's ongoing reconstruction and reform efforts provide compelling long-term narratives for observers interested in currency developments. While speculation regarding major revaluations will likely continue across online communities, professional market analysis remains focused on measurable economic fundamentals and official policy decisions. The latest information available indicates that the Vietnamese Dong remains stable under the supervision of the State Bank of Vietnam, while the Iraqi dinar continues operating within the exchange rate framework maintained by the Central Bank of Iraq. Investors are encouraged to distinguish between verified official information and unconfirmed rumors when evaluating future currency prospects. Economic growth, policy consistency, financial sector reforms, and investor confidence will remain the primary drivers influencing both currencies moving forward. For now, the story surrounding the Vietnamese Dong and the Iraqi dinar is one of stability, cautious optimism, and gradual economic development rather than sudden transformational currency events. As governments, central banks, and financial institutions continue implementing reforms and responding to global economic conditions, market participants will remain attentive to every new development. The coming months are expected to bring additional insights into the economic trajectories of both countries, but current evidence suggests that policymakers remain focused on maintaining orderly financial conditions while supporting sustainable long-term growth. Investors worldwide will continue monitoring these currencies closely as new economic data emerges and official announcements provide further guidance regarding future monetary policy directions.